Time for some business news now with Charles Pellegrin, and we'll begin by looking at Donald Trump's tour of the Gulf states this week. I'm just going to cut to some live pictures as we see Donald Trump's plane arriving there in Saudi Arabia. Charles, a slew of deals are expected to be announced here, and we'll focus on one sector in particular, and that's microchips.
That's right. The United States, obviously a global leader in the most advanced microchips used to power artificial intelligence models, and those are really coveted around the world. Donald Trump is hoping to use this as leverage to strengthen diplomatic ties with countries in the Middle East by looking to sell as many of those chips as possible. And the New York Times is reporting on one deal in particular. According to their sources, the Trump administration is considering selling hundreds of thousands of advanced chips to an AI firm from the United Arab Emirates called G42. And this could be finalized during the week. On Sunday, actually, the White House's AI czar David Sachs actually met with Sheikh Tahnoon bin Zayed, who's the national security advisor of the UAE, and also the chair of G42. They discussed ways to strengthen bilateral AI cooperation.
Well, tell us more about this AI firm, G42.
Well, the firm is part of a state-led effort to diversify the Emirati economy away from its dependence on oil. It includes a $10 billion technology investment fund. It's developed an Arabic language AI model, as well as a tech talent platform, a healthcare company, and a genome sequencing program. And that's what makes it such an interesting potential client and partner for U.S. chip makers like NVIDIA or AMD, as well as other AI groups like OpenAI or Microsoft.
Well, such a deal would mark quite a turnaround in U.S. policy.
The Biden administration was very wary of sharing too much of this advanced AI tech because they feared this could be used to develop leading-edge military and surveillance technology in countries that have autocratic governments. And the previous administration was also concerned about a firm like G42's ties with China. U.S. spy agencies have previously warned that the firm, which has worked with Huawei and other Chinese companies, could be used as a conduit to siphon advanced U.S. tech to China, which is Washington's biggest tech rival. After his meeting with Sheikh Tahnoon, David Sachs defended his engagement with countries like the UAE, saying, U.S. companies still have the best technology, but we are no longer the only game in town. It is well understood that China is catching up fast. The country that builds its partner ecosystem the fastest is the one that will win this high-stakes competition. Effective AI diplomacy is vital now more than ever.
All right, Charles, take us through what's happening on the stock markets.
Well, after the massive rally we saw on the back of that U.S.-China trade deal, which significantly lowered tariff rates between the two countries for 90 days. We're seeing lower or flat trading on the major European exchanges. Trade uncertainty still present, underlining the temporary nature of the agreement found between Washington and Beijing, the world's two biggest economies.
All right, and finally, Monday's announcement of a pause on the majority of tariffs between the U.S. and China comes as a major relief for U.S. soybean farmers.
The crop is America's top export to China and a pillar of the U.S. agricultural industry. Its producers have found themselves on the front lines of Donald Trump's trade wars more than once. Brian Quinn reports.
In Humboldt, Tennessee, planting season is in full swing. Matt Griggs is a fifth-generation farmer. One of his top crops is soybeans, and they're increasingly vulnerable to the U.S.-China trade war.
We've already forward contracted some of our planned production, and our hope is that with this volatility in the market, hopefully at some point, before harvest and then after harvest, we'll have some more pricing opportunities where prices shoot up.
Throughout the American heartland, soybean farmers have been on edge since Donald Trump began slapping tariffs on Chinese imports. The high-protein legume is a top earner for the U.S. agricultural industry, and China is key to its position. The country is the top importer of American soy, mostly as pig feed for its massive pork industry. Soybeans are the U.S.'s largest category of exports to China, at roughly 9% of the total. The sector represents more than 0.5% of U.S. economic output, supporting 250,000 jobs and bringing in nearly $125 billion per year. That position, though, has been in severe jeopardy as China slapped retaliatory tariffs of 135% on American soy. The recent 90-day pause on a majority of tariffs between the two countries comes as a relief, but it may be temporary. The unpredictability of U.S. trade policy under both of Donald Trump's terms has led Beijing to diversify its sourcing for soy to the benefit of South American producers. Since 2017, China has increased its imports of Brazilian soybeans by 35%, while reducing U.S. supply by 14%.
Thank you very much for that business update, Charles.